Morgan Stanley's outlook on Indian equities. Morgan Stanley has issued a highly bullish forecast for Indian equities, indicating that the market has hit a structural bottom and is primed for substantial gains. Driven by an accelerating earnings upcycle, robust domestic investment, and highly favorable relative valuations, the investment bank suggests that India remains one of the compelling long-term growth stories globally. Core catalysts for growth. Morgan Stanley points to several interconnected macroeconomic and market factors driving this positive outlook. Earnings upcycle. Indian corporate earnings are entering a fresh expansionary phase. The bank anticipates this acceleration to persist for several quarters, outlasting short-term headwinds. Surging domestic investment. Investment as a percentage of India's GDP is projected to climb to 37.5% over the next 5 years. This capital expenditure, CapEx, boom is being fueled by aggressive spending across core, high-tech, and strategic sectors, energy and utilities, defense, semiconductors, fertilizers, data centers. Strong macro underpinnings. The broader policy environment remains highly supportive, characterized by a stable fiscal framework, an undervalued currency, and modest real interest rates. Disproportionate global profit share. Highlighting India's corporate efficiency, the firm noted that India's share of global profits now exceeds its global index weight by the largest margin recorded since 2009. The report highlights that Indian equities are structurally mispriced relative to their growth potential, creating an ideal entry point for investors. Historic underperformance gap. India recently experienced its worst trailing 12-month relative performance on record, dragging relative valuations down to historical floors. Low foreign positioning. Foreign institutional investor, FII, positioning sits at a multi-year low, leaving massive room for inflows as global capital rotates back into the country. Market liquidity. Strong, steady domestic equity flows and a highly promising pipeline of upcoming initial public offerings, IPOs, provide solid liquidity support. The long-term target. India accounted for a massive 18% of global GDP growth in 2025. Morgan Stanley emphasizes that if the country sustains a 12% nominal growth rate, the equity market is positioned to deliver highly lucrative returns through the end of the decade. Morgan Stanley recommends an overweight stance, or favorable, for several industry segments: financials, consumer discretionary, industrials, and IT services, specifically for building global AI solutions. Conversely, they advise an underweight, or cautious, stance on energy, materials, utilities, and healthcare.